Hello, everyone. Mike Arnold here, co-founder, Path Trading Partners, along with Bob Iacchino, just trying a pre-market little live stream. We'll be doing more of these in the future. Good morning, Kalani. How are you this morning? You know, I got my coffee here. Well, I got to get it in the camera. I can't see. I'm all backwards this morning. There we go. Coffee here. Let's see. Good morning, Sterling. We'll just go over a quick. This is not going to be a super long one. By the way, if you're new here, please do consider subscribing, ringing that bell, and hitting the like button. We're not going to dwell on that either. Now that that's out of the way, we have some unemployment claims not as bad as forecast and lower than previous. So that's out. These were minor to preliminary labor costs and preliminary non-farm productivity quarter over quarter. I'm still going to be keying off of final services PMI and the ISM services PMI coming out at 9:45 and 10 a.m. Eastern. So I will really be watching for those. Let's take a look at the overall market though, just real quick. S&P, we had this double bottom coming up and hitting the second target on there and now reversing with weakness. Also, we have on this little shorter term time frame, we have this double top. You can see it on the 15-minute. You can see it on the 1 hour. And clearly, you know, we've been selling down here since, you know, the European session. We've already hit the first target here. Next targets I will be watching for right at the open is about 45.02, 45.0175, and then 44.90. So that is the first area I will be watching to see if we have any support. My bullish line in the sand right now is about 45.11, so we'd have to get back above. We're trading right about there now, but we'd have to get back above there. And then I really need it to get above about 45.42 to really get intra-session bullish. If we drop below 44.90, besides doing some harmonic projections, I'm watching 44.46, which would be the 37.5% retracement of this up move. Also, right now, we're at the bottom of the 4-hour rotation zone, which is essentially about the second target. So if we do get any strength, I'm going to be watching to see the strength of the rotation up. If we just get a little pause and then break through that, then I'm definitely watching for that lower prices. Good morning, Dave. Good morning, Josh. Again, glad to have everybody here. We're getting that pullback again. We saw in the market overview last night stuff like PayPal just getting obliterated in a number of the other earnings stocks. I'm still going through my earnings rotation this morning, so I'm not going to be covering that. I just want to get this main marks out of the way. NASDAQ really, really weak, also hitting the second target on this double and coming all the way back. It's pretty close to the breakout zone, already at the 37.5% retracement. We break below that. We did not have a double on here. We had this little minor double, but that's already hit. This you can see at the end of yesterday, the selling pressure moving sideways, then moving sideways and then rolling over. If we get below here about 14,675, my next area is a flat 200 and the 50% pullback. 14,480 to 14,500 will be very key. You get below there, I'm going back all the way to 14,300. But if we start getting below this 14,500, it is not good for the NASDAQ. Okay, you can see here, down closed just above the rotation zone, but now clearly back up below the rotation zone. And on the weekly, you can see spike into the weekly rotation zone and now rotating lower. Yes, we still have Friday to come, so anything can happen still, but we could not get into a sustained move into even the weekly rotation zone. Dow, strongest of them all, only down 0.39%, 0.38%, whereas the NASDAQ's already down 2.72. So again, if you're trading any of these high flyer PE stocks like Tesla or some other ones, really start to watch for continued selling after the open. Right now, the Dow, my first little area of support, let's go through this too, because it's going to looking to hold up the most 50 EMA on the 1 hour with 35,270, which is the 12.5% harmonic. We get below there, Then I'm watching anywhere from about 35,150 to about 35,100 right in there. And if we drop below there, then I'm watching for a return to about, that would be the 35,100. Then I go all the way down to about 34,950. But really, I'm focusing, if we do pull back to 35,100, that's the 4-hour rotation zone. I will see if we can get a rotation back up at all. Good morning, Daniel. Glad to have you on. Mike, I invested my lifetime savings on Tesla at 938 the other day because I didn't believe your technical analysis of Tesla going below 300. I suck at this. I am heartbroken today. Okay, Andre. First off, I really can't give individual trading advice, but you don't want to put everything into one stock. Okay. I know Tesla's outperformed, but Tesla also has a ton of risk. You have to manage risk first. And sometimes the best thing, if you're questioning things, is to get out of the position because you're in way, way, way too heavy. You're in a concentrated position. Okay, that is very dangerous. Please reach out to me via my email at Path Trading, okay? You don't want to be in a concentrated position. That's a very risky, dangerous position. I'm not saying this can't go up, but you're in something that has a long-term, now potential downward bias, and you went all in. So let's just go over to Tesla, since you brought it up, is pre-trading about 870. As I highlighted on that stream yesterday, I'm watching about 867 is the retracement. But here's what's key. If we start getting the move below the low from the 31st of January, this power up move with the end of month rebalancing and everything going on at end of month, then I'm watching for the gap fill so we have more downward price action. The 62.5 is key. If we get a close below there, especially on a daily basis, then I'm watching for sustained lower prices, and I will watch for a retest of these lows and then probably a break of the lows if the NASDAQ keeps going. Now NASDAQ down 400 is just getting selling pressure, down 2.6%. We will watch for a potential bounce on the open, but even on a rally, 14,900, this little resistance shelf is now resistance shelf again. You have about 14,838, then 14,900. If you can't get a sustained move back up above there, again, I'm watching for selling pressure to continue. This is not positive with the NASDAQ right now. And overall, you know, we have more potential down. I'm watching for lower prices in the NASDAQ to break this 13,706. And I'm not talking today. I'm not even talking next week. We'll have to get the timing down to see how this kind of selling pressure comes in. But longer term, if you get this selling pressure breaking down, you're going to still see a lot of stocks, especially high flyers with PEs, gonna get hit. Okay, they're gonna get hit. Here's the chart I put up in market overview yesterday. I'm just trying to really help people not get, I think we're going to have some very tumultuous times in the market. This is the NASDAQ 100 stock index PE ratio, okay? And this is off of Bloomberg Terminal. Look, we're still at 25.7. It's pulled back from just above 30. But if you look at the historical context, this goes all the way back to 2004. This is very high still. We could easily come down to 15, 16, 70. I'm going to start watching at 17. So longer term, you can still see a lot of these stocks that are trading at very high PE levels come down. That's what I want you to be aware of. All right. So just be careful with this. You know, and I'm just trying to, this reason I'm pointing this out, we'll watch for that potential bounce to see if it gets a little strength on the open. I'm just telling people to be cautious, especially with that S&P still double. We've nearly hit the first and second targets. It can still, we got a little bounce in here, but that can easily just roll over. Minor level on the S&P now is about 45.21 with the declining rotation zone right there. And then really watch to see what happens at this 44.90 to 5,000 if you're watching the S&P, and I recommend you do that, and especially key off the NASDAQ if you're in high flyers. Are you looking at the gap fill on a 5-minute closing basis within the first hour, Tesla, or a higher time frame? I am going to, well, it depends how aggressive you are. If we start getting momentum into that closing area, then it would be just a 5 minute. If it's dribbling into that area, if it's just easing down and we're just not momentum bars, then I need something like at least a 15-minute, preferably an hour. But if we start getting momentum bars coming down, how I'll watch the momentum bar play. I'll watch for a little retracement and then a rollover move, and then I'd be targeting the gap fill. It's got to be taken into context. And with the NASDAQ now 2.67 down over 400 points, and again, the 400 points is not relevant as much as looking at the 2.6%. That's what's key. Look at things at a percentage. Like the Dow's only down 31 basis points. NASDAQ's down 2.6 and the S&P down 1.3. So the strength is in the safety, as I said before, in market overview. Strength is in the Dow still. Even with this pullback, you can see the major discrepancy, and the high flyers are getting sold again. All right. This is just a high PE reset, and I think that's going to take place more throughout the whole year, not just on these little pullback moves. Yeah, it's part of the nature cyclical. It's cyclical, and even PE in the NASDAQ of 17 is not at bargain basement prices, and we could easily see it go beyond that. That's my first area I'm watching. All right, so that's it. Really, let's just check in on the Russell too, because again, that is... the small cap stocks. Russell returned to the daily rotation zone, starting to rotate back down. We're now back down below about 2001, and I have a significant level of 2005. If we break down below that, I'm watching for a return to about 1950, not necessarily today, over the next couple of days. Crude pulled off its highs a bit. Even with this selling, watching for a potential bigger pullback, but you can see pretty much red across the board here. Let's check in notes. Notes, again, could not get above the daily rotation zone and now starting to rotate down. So that means yields are going back up. Let's take a look. We'll just peek in at not the yield curve, but just in here. There you see. And this looks like it's now going to be forming a triple top. Not quite there. Never triggered this double top. It's got to get up to around this 1.87. Sorry, not 18. But if we were at 10-year notes being 18%, you better. We'd be in the market dumps. But I'd be all in on a lot of notes with cash. Let's see. 1.87% back up here would invalidate this double, become to triple. Then we'd start watching really strongly for that continuation pattern in yields. So I'd be watching again for things to key off of this morning, not the ETF. Keep an eye on these 10-year notes, and if it starts to stabilize a bit and or starts rally. It's got a little dip buying right now, but even if you rally back up, you see this key level right here, about 127.24. Even on a rally, I'd watch for then a rollover move if that holds. And, it can go a couple ticks either way, but that's an area that if we do rally back, I'll watch for a potential rollover move. If we roll over again, we'll probably have even more weakness in the broad markets. That's where we stand today, so just be careful. Andre, please manage your position wisely and please take care of that position. You have everything in one stock, which is dangerous. Gonna watch for that bounce on the open. Get in Discord too, and if I see any major updates, I will type something in there. And with that, let me know if this is useful for everybody. Let me know if you want to, see more of this. And I'll probably do one tomorrow for non-farm payrolls also, especially with this weakness. Talk to everyone later. Bye for now.